That was, again, an excellent presentation about understanding of enterprise risk management and how to mitigate risk at times where we see it's a depressed market altogether, and after the financial meltdown, of course, this is something we all as corporate practitioners should think of implementing. What I would suggest here in this particular context that there could be a possibility that one of you from the audience, they are working in this at the moment. If you would like to share something, or would like to refer something to Kevin and ask questions from your side, that will be good. Before I have a question for Kevin, which I kept it for the last, but I would like you people, someone, if you are involved, or what do you think of that approach which he has shown here? Please. Thank you. Please give your name and the company you represent as well before asking question. Thank you.
Thank you, Kevin. I'm Bernard Obel from Insurance Regulatory Authority of Uganda. I just wanted to get some clarity on the relationship between global risks and country risks. Mm-hmm. I imagine that the starting point for Standard & Poor's now is to begin by rating maybe the developed countries like United States of America. Whatever happens in the US definitely affects our economies, however strong our economies may appear to be. I can give an example of the credit crunch, the 9/11, where the market really hardened. 9/11 didn't affect us directly. We thought we were very far from it, but our insurers couldn't get premiums at good rates. Mm-hmm. Two, I wanted to know that, I know that Standard & Poor's is a non-profit, is it a profit-making organization? Now, when you become so tight...
The information I have is that we are a profit-making organization, yes, that's right. But we don't publish any information, and I can't give you any more insight than that.
Yeah. How do you stop yourself from getting tempted to give better rates to particular companies? Because when you become so tight, you lose business and you lose your livelihood. And when you become so loose, you lose your credibility.
Okay.
Maybe you could give me some guidance on how you are. And then thirdly, I also wanted to know the relationship between country risk and corporate risk. Because there's a company in South Africa that wanted to be rated, but they told us they could not be rated beyond their country rating. Because their country rating, I think, is something to do with B or C, something of that nature. Thank you so much.
Okay, thank you. You've covered a number of areas that are loosely related to enterprise risk management. I'll deal with the middle one first, which is the avoidance of conflict between having a contract with an organization for rating and ensuring that the rating that we deliver is independent of financial influence. You'll see I put up on here two references. One is to me as the analyst based in Dubai, and the other one is to my colleague who works on the contractual relationships with clients. I, as an analyst, am forbidden by S&P internal control frameworks and by external regulatory frameworks from participating in any contractual discussions with a client. So I do not know how much a client pays for a particular job. I do not know if that client is paying an extra fee for delivery in 2 weeks as opposed to delivery in 2 months. I'm required not to know any information about that. If at any stage in the analytical process that I am involved with, I am inadvertently exposed to knowledge regarding the contractual relationships, I have to advise our quality officer and our compliance team, and they will take appropriate action, depending upon the circumstance. It is a matter of fact that the rating decision is not that of one individual. When we do a rating on a company, we set an analytical team. It's typically 2 people, a lead analyst and a backup analyst. When that rating recommendation is delivered by that analytical team to a committee, it is the committee's decision. So the minimum level of attendees at a committee in Standard & Poor's is 5 for a new rating. So if I am to be persuaded by financial incentives to produce a rating at a certain level for a client, I need to persuade other people in the room to take that same decision. And that is not what happens. I can assure you all absolutely that the ratings we deliver are always independently produced and that there is no financial bias in any of the ones that are delivered. Yeah. Sovereign risk, clearly a sensitive topic. It is one that dominates discussions at the moment. Standard & Poor's has taken rating action on a number of sovereigns, both in the region, the GCC region, and in the more developed markets like US and Europe. It is a matter of our published criteria that, except under certain exceptional cases, ratings in domiciles are generally heavily influenced by the sovereign rating of the domicile that they're operating within. So here, let's give Bahrain as a better reference point, because I know that the information. Bahrain has a sovereign rating of BBB with a negative outlook. For those entities that are heavily dependent upon the Bahraini domicile for their business, in terms of where the business is coming from and where their investment portfolio is handled, then it is only fair that the sovereign rating is deemed effectively a ceiling to the rating. That is because what that company can do with those assets is ultimately at the control of what the government makes the decision to do. That is the simple version of the criteria that we have. However, what we do have in a number of regions is what we call a national rating scale. And here in the GCC, we have a regional rating scale that one or two companies have made use of. And the intention behind that is to reduce the often overt regulatory sovereign drag that a rating can often introduce. And what I'd like to say is that where a rating is heavily constrained by sovereign influence, then we will make sure that the words we put into the report that we're producing for the company reflect the strengths of that enterprise as opposed to the sovereign drag that is actually putting a cap on where that ceiling is. And another thing to state, an important point, all the ratings we do are confidential for everybody until the client that has paid us for that job says, yes, we're happy to publish that rating. Once it goes into the public domain, our client base then becomes part of the rated community, and we expect that client to be open with us in all aspects, and ultimately the committee decision is the one that is published. If we produce a rating opinion on a client and they don't like it, and that's a published rating, they can appeal it, and they can bring information to us at a rating committee that think will greater clarify the decision determined by the committee. But ultimately it's the committee decision that's published at the having utilised information that the rated entity has given to us. Your first point was regarding reinsurance cover being provided to the African market after the trade centre disasters. Yes, you're right. Some of the international insurers pulled their books of business from the region.